Well, thank you. Thank you very much. I would like to thank Clarion Events for inviting Global Business Reports to moderate this panel. I would like to welcome our panelists and our audience. My name is Alfonso Tejerina, the Director and General Manager of Global Business Reports. As I said, a pleasure to be here after our participation this year at the DRC Mining Week and the Nigeria Mining Week. We are very glad to be here today at the Africa Mining Forum. Before we start, I'll just have a few words about the organization I represent. So Global Business Reports, we're a business information provider specialized in different industries and covering the whole world. We have 2 decades of experience researching the mining, oil and gas, power, chemicals, and pharmaceuticals industries, among others. And in this slide that you can see here, well, you can have a quick look at some of our latest industry reports. In Africa, in particular, we have our MASIC brand, standing for Mining in Africa Country Investment Guide. We happen to be launching a special West Africa digital edition today that will be shared with the audience later in the chat. But also you can see our work on oil and gas and work in other jurisdictions in mining, such as Chile and Ontario, for instance. So you can download all our industry reports at gbreports.com. Now, so let's go into the panel. This panel's title is Beyond Gold, West Africa's Potential to Feed the Emerging Battery Metals Market. I really like the title of this panel because often investment markets overlook the potential of hidden gems in particular jurisdictions. If you think of Chile, for instance, you might instantly think of copper, but Chile is also the 2nd largest lithium producer in the world. And the same happens in West Africa. For the non-expert eye, it is all about gold, especially this year as the gold price is reaching record levels with the pandemic. But battery metals, while battery metals have not performed so well recently, long-term, the electrification of transport is here to stay. The world is going to need more lithium, more cobalt, more nickel, and also copper, vanadium, graphite, etc. So Africa has an opportunity to feed this growing value chain with top quality projects that meet international standards. Earlier this year, we saw Tesla expanding its relationship with Glencore to buy more cobalt from the DRC, for instance. So some of the topics that we will discuss in this panel include the overall potential of Africa to increase its share in the battery metals value chain, the potential specifically in West Africa for new battery metals projects, and the challenge to attract investment in a region where all eyes are on gold, and also a region where there have been some political and security issues recently. So we'll be glad to discuss this with our high-level panelists today. They will have a few minutes to do an opening statement, and then we'll just dive into the Q&A session. Before they begin, I would like to introduce them to our audience. So first, we have George Heppel from CRU. George is a senior analyst of cobalt, lithium, and nickel for CRU since 2017. He is responsible for market intelligence in these metal segments, including extensive research on the electric vehicle sector and its implications on commodity demand. George's client and professional network includes mining producers and refiners, traders, investors, and automotive companies. Prior to this, he held roles at ICD Europe, where he was a trader and business development manager, specializing in rare metals, and he also worked at Shell, where he was a pricing and contract analyst. George studied material science, economics, and management at the University of Oxford. Secondly, we have Bernard Awood, who is a geologist with a trajectory of more than 20 years in the mining and exploration industry, with experience in regions around the world, from Australia to South America, Siberia, and Africa, and in a variety of commodities. He has held a number of senior positions in publicly listed entities, including Managing Director of Taruga Gold, COO of International Goldfields, and General Manager of Azuma Resources in Ghana. Bernard was involved in several discoveries in Western Australia and Africa. And today, he is here as CEO of Kodal Minerals, a company with lithium and gold assets in Africa that is currently focusing on its flagship Bougouni lithium project in southern Mali. We'll be delighted to know more about it later in the discussion. And finally, we also have George Harhin, who is an assurance partner at PwC, PricewaterhouseCoopers, where he also holds the role of PwC Business School Leader, Human Capital Leader for PwC Ghana, and more importantly, for the purpose of this session, he is PwC's Mining Leader for West Africa. George's career at PwC spans over 14 years, 2 of which at the UK office. And over this period of time, he has worked on projects in over 15 countries. George is a certified financial and management accountant with a degree in business administration, accounting and economics from the University of Ghana. He also completed his MBA at INSEAD in France. So I'd like to thank the three of you for joining us today. And George Heppel from CRU, perhaps we can start with your opening statement.
Thanks, Alfonso. I think for my opening statement, I'm going to focus a lot more on the sort of demand picture for battery metals. And I'd like to start by just sort of harkening back to pre-COVID or the early stages of COVID-19 in sort of March and April. And as analysts, there were a lot of reasons for us to be pessimistic about electric vehicles and battery metals at the beginning of the year. There was a lot of economic turmoil being faced. We had governments, facing a lot of sort of debt issues, and there was the potential that maybe we would begin to see austerity plans that would maybe remove subsidy policies. At the same time, we saw a massive decrease in automotive sales, and there were also concerns that car companies might delay their electric vehicle plans in order to sort of preserve their balance sheets. And finally, obviously, you also had issues on the consumer level. We had high consumer debt, the risk of unemployment. There were some concerns that maybe that would result in less demand for electric vehicles because they're typically more expensive. But none of this materialized. The real sort of zeitgeist of policymakers over the last sort of year has been this idea of like a green recovery. And a lot of major economies around the world have used the opportunity of COVID to really push forward green recovery plans, especially in the electric vehicle sector. In Europe alone, there's 5 countries in Europe which make up about 2/3 of all electric vehicle sales generally. Of those 5 countries, 4 of them have introduced new subsidy policies this year. And as a result, Europe's on track to overtake China as the largest EV market in the world next year. China also has very strong EV growth aspirations as well, as shown through their most recent 5-year plan, which I think they were planning for 20% of all vehicle sales to be electric by 2025. But a lot of the focus is on Europe at the moment. And as a result of all these policies, we expect plug-in sales, sales of plug-in electric vehicles to go from 2.5 million last year to 10 million by 2025. And by some measures, that could be maybe a slightly pessimistic forecast. There are forecasts in the industry which are a lot more optimistic than that, but ours is always a little bit more sort of conservative as a general rule. As a result, we're expecting a very strong increase in demand growth over the forecast period for lithium, nickel, and cobalt, the 3 key battery metals. Nickel and lithium we expect to increase in demand in batteries by 3.3 times over the next 5 years. And cobalt, we expect demand from batteries to increase 2.4 times, slightly lower as a result of thrifting out of cobalt in batteries and so on. But this nonetheless creates a lot of opportunities within the global mining industry for all 3 elements. Obviously, when it comes to cobalt, the DRC's dominance of cobalt mining is widely known. And this is unlikely to change anytime soon. The sheer quantity of cobalt in the DRC, as well as the grade of the ore bodies and reserves there, is pretty much unmatched anywhere in the world. The DRC is to cobalt what Saudi Arabia is to oil or China is to rare earths. But certainly for the other 2 elements, lithium and to a lesser extent nickel, there are many excellent reserves and ore bodies across the world, including in West Africa, which could potentially benefit from this increase in demand. Certainly as we begin to see prices rise towards the mid-2020s in order to stimulate another sort of greenfield investment cycle, which will be required. But having said this, a good ore body isn't everything, and there are many challenges and considerations which must be taken into account when picking mines to invest in and different regions to invest in, and that includes political risk, infrastructure, funding concerns, logistics, offtake partners, and many, many more. The battery metal sector is an excellent, very positive future ahead of it. And speaking as analysts, it will be really interesting to see which mining operations thrive in the wake of sort of more demand for these elements. And I look forward to discussing this further with my fellow panelists and answering any other questions that people have. So thank you for listening, and I look forward to discussing this further shortly.
Perfect. Thank you very much, George. Very, very interesting insights that you're giving us to start with. Now I'd like to give Bernard from Caudal Minerals the opportunity to give his opening statement as well.
Thanks, Alfonso. I'd just like to introduce our company and run through a few of the issues that we see. And probably building a little bit more on what George has just said about demand and issues for companies being able to develop a project. And what we have in our portfolio in West Africa is our focus is our lithium project at Bougouni. We also have gold, of course, being that we're in West Africa. But our focus, particularly over the last few years, has been the exploration and moving to development of Bougouni. So if we start to move through the slides, you'll see that our focus here is initially de-risking our project, and that has been involved with extensive exploration and resource development, moving through the permitting phase from environmental through to completing a feasibility study to support our mining license application. So we're now in the process of finalising our application with the government of Mali and looking forward to completing that soon. From our side as a company, we've completed everything. We understand that our application is in essence approved, but waiting formal bureaucratic sign-off. So we're in a very good position. And what we're demonstrating is a very robust mine. The feasibility is showing attractive fundamentals that we believe will support us getting developed. And if you look at, and as we go into our next slide, you'll see that we as a company have focused particularly on synergies to support us with development. So number one, Kodal has a major shareholder who's about 23 to 25% of the company that is associated with the lithium carbonate producers in China. We have an offtake agreement in place to take the majority, 80% of our product to 100% they're interested in acquiring. We have signed an MOU with a neighbouring company with a similar project in the same area. And what we hope to do with this is actually benefit from synergies of working together to improve our cost power for power generation, trucking, ability to source labour, supplies, and ongoing development opportunities. And most recently, we announced an MOU with a Chinese infrastructure and development company, Sinohydro. And we're particularly pleased here as this demonstrates our long-term commitment to working with partners, developing good relations within the lithium industry, and finding groups who are looking to work with us, and particularly Sinohydro, a major company, looking to help us with the infrastructure development, engineering, looking to work towards an EPC contract and assistance with financing. So a few major steps forward for us there. And one of the reasons we're really excited about being able to move towards this development of a new mine in West Africa, and you'll see on our next slides, we have looked at a few processes about, and I think this touches on what George just mentioned about the focus of a lot of governments and a lot of populations and a lot of personal demand to generate more green energy, and we feel that we would fit nicely into the supply, and we're showing a few estimates of demand, and you can see that what we're focusing on is our product is a good quality product, certainly suitable for fitting into the battery market. You can see that we see a rapid increase in the utilisation of batteries, particularly EV, as George mentioned, and the projected selling prices of battery costs. And obviously, you'll see that as the technology improves, as the development of better batteries improves, the price is falling. So all around, we see a strong increase in supply. And I think one thing George mentioned was that government initiatives are driving supply. But also one thing we see is that demand is a real lag. And we think we're moving into a very strong position to be able to fill a demand gap. So if we look at again at our, moving on to our next slide, again, just continuing the theme of electric vehicles really as the key driver for this growth. And as I mentioned, continuing development and improvement of batteries is driving down costs. And there's the second graph there is showing a electric vehicle penetration, and maybe that's a bit optimistic on a full take-up by 2050, but I think there's no doubt that we are moving into an electric vehicle future, that the improvements will continue and the take-up by population will be markedly increasing. And from our point of view, it's lithium that's the irreplaceable part of these batteries. The other commodities such as cobalt, nickel, graphite can vary in the quantity and the amount used and the application, but lithium is always going to be there. And so this is a very strong driver for our confidence in this opportunity. And as we move into the next slide, I think it would be remiss of me not to briefly mention, as I said, West Africa, as we all know, is famous for gold, and Kodal has a portfolio of gold projects that we're very happy with in southern Mali and Cote d'Ivoire. Excellent opportunities for continued development in West Africa. And as we talk through the panel, I'm sure George Aren will have some comments about governments in West Africa looking to diversify their mining industry. And we think that's going to crystallize into strong support for our development in Mali. And also we note that we'll be transporting our product through Cote d'Ivoire and exporting out of the ports in the Ivory Coast. And we anticipate that generating value, not just for Mali, but also for neighboring countries. So that's Kodal as a starting point, and our place and our confidence in the lithium market in West Africa.
Thank you very much, Bernard. That was a very good introduction on Kodal. And yeah, finally, George from PwC in Ghana, you have an opening statement about the potential of West Africa in the battery metals market.
Thank you very much, Alonso, Alfonso, and thanks to George and Bernard. It's quite an interesting discussion so far, but yes, the World Bank just published a report that shows that West Africa supplied 9% of the world's demand for bauxite in 2019 and 8% of gold in 2019. So clearly, when you talk about gold and bauxite, West Africa plays a very significant role in the supply of those minerals to the world. However, given the recent change that the world is seeing, it's clear that West African countries cannot depend on only these key resources if they want to see the kind of growth and transformation they want for their countries. Hence, there is a need for West African countries to look elsewhere. And we all, from what we've heard this morning, battery metal is a key area which is growing and will continue to grow. The market is valued at, I think, 14.8 billion as of 2019, and is expected to grow at a cumulative annual growth rate of 2.4%. So looking at this, it's really showing positive signs. The world is growing. I mean, we are a very big world now. A world of 7.8 billion to be growing at 1.1% means we'll still be adding a lot more to our numbers. And with the growth is associated with, I mean, demand and global warming, our carbon emissions will still continue to go up. So the pressure on electric cars, like my colleagues have just mentioned, is high and will continue to be higher. Hence, the opportunities for Africa to produce metals to support the growing or the ever-growing demand of batteries. World countries around the world have started looking at how indeed they can take advantage of those. George mentioned earlier on that China has made a move. The plan is China has the biggest vehicle market in the world, and they have planned to that by 2025, at least up to 25% of their vehicles should be electric vehicles. And they've backed that move with policy by giving a subsidy to make sure that those in that industry does well. So the move by China, the growth in world population, the change in taste and preferences all point to the fact that the demand for battery metal is going to increase in the coming years. And this is where Africa comes in. metals like aluminum, iron, copper, manganese, lithium, nickel, cobalt, phosphorus, and then graphite will all be in demand. So looking at West Africa in particular, we're looking at how we can take advantage of these. And to start off with, I can say that when you talk about aluminum, West Africa has the potential to fit that market through its bauxite. Bauxite is the primary source of aluminum, and we know that Guinea and Ghana are key players in the bauxite space. Guinea has the world's largest declared bauxite with about 440 billion tons of resources. So we only need to take advantage of this and then make sure that West Africa, West Africa is able to take advantage of the emerging opportunities. Ghana is also taking very active steps to grow its bauxite industry. Recently, it has just signed an agreement with China through its Sino-Hydro Master Project to support the development of the bauxite industry. Through that, Ghana is supposed to ramp up its production and meet the world's demand for aluminum through bauxite. Sierra Leone has also made significant discovery of bauxite, even though it's been untapped. They have about 1 billion tons of bauxite. So within the West Markets region, countries are poised and have the potential to provide those key metals. We talk about manganese as well. 80% of the world's manganese deposits sit in Africa, with Ghana and Ivory Coast playing a significant role in the supply of manganese. The world's supply, 10% of the world's total manganese production came from Ghana and Ivory Coast in 2019. So if only these two countries are providing 10% already, then we are poised in the sense that these countries are putting in measures, given the opportunities they see to ramp up production. Graphite is also another area that there are abundance of resources within the region to provide. Guinea and Liberia have graphite, and therefore it is an opportunity for those countries to take advantage of. We talk about nickel, we have Cote d'Ivoire. Cote d'Ivoire currently produces nickel, it forms 2% of their GDP. Through private and public initiatives, there has been about 400 million investment in the industry last year, and they are planning to ramp up production to 10% of their GDP, all in anticipation of meeting the growing battery demand. Lithium sale, Mali, Ghana, Cote d'Ivoire, key players in that space. When you talk about cobalt, George mentioned earlier on, 50% of the world's production of cobalt comes from DR Congo, and within those, there are other opportunities within the region. So clearly, there are a lot of metals that goes into the battery, into battery production, and the countries within the West Africa region are keen or have the resources to be able to support or provide in those areas. However, it must be said that given the potential, we need to bring those potential to realization. And that can only happen if countries within Africa, and more specifically West Africa, are able to put their act together in a way that they can harness on this potential. By so saying, I'm talking about having a very good database for exploration so that people can come in and invest. There should be a bit of stability in terms of tax regimes to be able to attract investments to take advantage of the minerals that are available, since it requires significant capital. We also need to put in security measures. Security is one key concern in the region. And so we need to ensure that our security is tight, such that investors will be happy to come through and invest. Having put these little things together, or these points together, or these challenges that the region is facing together, and given the opportunities available and the resources that we have, I strongly believe that we will play a key part in furnishing the world with the metals required for batteries. Thank you very much, and I'll come back to you, Afonso, for any
Excellent.
additional.
Excellent, George. You provide a great overview. Obviously, West Africa is a big region, and there's many countries and potential for many different commodities. Now, we're starting to get some feedback from some of the people in the audience. Some of the comments that are coming up is the impact of the pandemic on the demand for electric vehicles. So on one side, when the pandemic happened and everyone left their cars in their garages, there were clean skies, there was no smog, and everyone realized, well, we should have cleaner air and we should have cleaner vehicles. On the other hand, as George from CRU mentioned, electric vehicles are more expensive. We live a moment of economic recession due to the pandemic. So how to balance that? How that is going to balance out in the final equation of demand and supply is still to be defined. So my first question for George Heppel from CRU. In terms of lithium in particular, years ago, everyone talked about the Salar Triangle in South America, but now, how do you think Africa can fit into the equation? What's the potential for Africa to feed the lithium value chain moving forward?
Sure. So, one of the reasons why, I mean, the main reason why the lithium triangle sort of took off originally was it fundamentally came down to cost and scale. The lithium triangle extracts lithium from brines, and they typically are able to extract low-cost lithium carbonate, low-grade lithium carbonate at very, very low cost. And this has mean that over the last few decades, they've been able to carve out a sort of a major sort of market share. But the world doesn't need low-grade lithium carbonate anymore. The world needs high-grade lithium hydroxide for batteries, and to a lesser extent, high-grade lithium carbonate as well. And when you look at the cost structure, so when you're looking at the cost curve for lithium carbonate, it's very bifurcated. You have, you have the lithium triangle here, and then you've got the costs for the rest of the world, which is hard rock mining sort of here. But when you're looking at the cost curve for lithium hydroxide, it's a lot easier to go from hard rock mined spodumene to hydroxide than it is to go from brine-based carbonates to hydroxide for a variety of reasons. And that means that the cost structure is actually a lot flatter than you would otherwise think. And that's why we've seen a very strong increase in growth of sort of spodumene production, mainly in Western Australia, but we're also seeing increases elsewhere in the world, wherever you have high-grade spodumene deposits. There are other considerations as well to think about. Water usage is another big one within the brines, and also the other thing as well is that the brines, the lithium triangle, they produce very, very low cost, high volume material, but it's very difficult for them to, there's large sort of capex requirements up front. As a general rule, the brines have a very, very high upfront capex requirement, and then they produce very low cost material. Whereas for mining operations, the capex requirement upfront is lower. The cost of material is typically higher, but in a rising price environment, that's not too much of an issue. The point is that the spodumene concentrate supply can react a lot faster. And that's what we've needed over the last few years in response to higher demand, and that's what's happened. So yeah, I'd say that the lithium triangle, there's always going to be a space for a lithium triangle at the bottom quartile of the cost curve, especially when looking at sort of lithium carbonate in sort of industrial applications and that kind of thing. But when it comes to sort of producing, low-cost, high-grade lithium hydroxide for the battery sector, we're going to need a large expansion in the sort of mined sort of spodumene concentrate-based supply worldwide in order to meet that demand.
Perfect. Thank you very much. And Bernard, you have a spodumene project in Mali at Kodal Minerals, and I'd like to go back to the title of this session, which is Beyond Gold. So of course, West Africa is a place where you have the top miners operating: Barrick, Newmont, IAMGOLD, B2Gold, you name it. But looking at other projects that are not in gold, how much interest are you seeing in the market from investors, from media, from the market in general for your lithium project in Mali?
Well, Afonso, we've always attracted a lot of interest into our project, and that I think is primarily, as you've probably alluded to, that it's a point of difference for a company operating in West Africa to be able to demonstrate a project that appears economically viable, that has attracted support towards its development, has been able to secure an offtake agreement. So when we do come to production, we've got a group willing to take that. And as George was just talking about, the ability to produce a quality concentrate that can then be converted to a battery-grade lithium carbonate or lithium hydroxide will always be in demand. And we obviously, we're not the only company exploring in West Africa for lithium, and there's other projects, and I think it's a very good sign for the potential for the region to develop. And one thing to comment on clearly is the proximity of Africa to Europe. And we're all aware of the increasing demand. And again, the panels mentioned that the probability of a huge increase in demand for electric vehicles arising out of Europe will invariably lead to an increase in demand for the products to feed those batteries. And Africa is particularly well placed to support an increase in European demand. And I think that's going to be important for not only our project being able to develop, but other projects in the region. And I do agree to a point when George commented that the spodumene products or the hard rock mining are able to move quickly to fill a supply deficit. However, it is actually still 18 months to 2 years before that can be filled. And companies should be actually looking now to secure projects, to demonstrate the viability of those projects and be ready to move to a mining operation. And I think that would augur well for West Africa's future.
Perfect. Thank you very much, Bernard. George from PwC, George Arhin. Well, we have seen a very dynamic mining space in the last months in West Africa due to the high price of gold. Actually, today we learned the confirmation of the business combination between Endeavour and Teranga Gold, for instance. Do you expect M&A to increase consolidation, have more transactions in the non-gold space in the times that are coming due to this perhaps bigger demand for battery metals?
Thanks, Alfonso. Yeah, it's quite an interesting question because, like you rightly said, the region has seen a lot of investment in gold, and investors continue to invest in gold and base metal when it comes to exploration because that's a more mature and stable environment. So what's currently happening is exploration activities are left for most of the junior miners to explore. However, they lack funds because the funds are being given to the gold and base metal companies. So there is a big gap between the opportunity the battery market poses, the current exploration activities that is being undertaken by the juniors, and the funding of those activities. And that gap creates an opportunity for mergers and acquisitions. So clearly, we see that within the region, there will be some mergers and acquisitions in the battery metal space. Yes, having said that, it's been slow, or is slow in a way that COVID-19 has really slowed down trends. We saw a big decrease in the volume or value of mergers and activities globally. It went down by, I think, 32%. And the kind of mergers and cross-border merger and acquisition that comes into West Africa as of April 2020 has reduced by 72%. So clearly, COVID had effect on mergers and acquisition within the region. But having said that, it's just a delayed effect. The junior miners, most of which who are doing the exploration, are not getting the funding, and it's an inevitable. It will happen over a period of time.
Okay, thanks for that. I'm reading some of the questions that are coming from the audience, and this one I'd like to ask George from CRU. One attendee is asking, is it an exaggeration to say that lithium-ion batteries will become the new oil? And he mentions that low carbon future will be highly dependent on cobalt energy storage. What do you think is going to be the dominant commodity when it comes to these new technologies? Or do you think there's going to be a combination of all?
Well, when people say lithium-ion batteries become the new oil, I guess I don't really understand what that analogy means. Does it mean that lithium-ion batteries are a high-growth market? Then yeah, I'd say they are. Are there sort of political risk associations with lithium-ion batteries similar to oil, or will there be in the future? I guess so. I guess my main issue is that I don't really understand the analogy between lithium-ion batteries and oil. I think it doesn't really make sense in my head. In terms of sort of challenging sort of the environmental impact and the role of African governments in mitigating environmental impacts, well, that's going to come down to policy. Ultimately, the environmental impact of mining operations is dependent mainly on sort of your energy source. Certainly speaking about the DRC, a major component of carbon emissions with the mining sector there is associated with the energy sources used in those mining operations. Right now, they're relatively low as a result of the large amount of hydroelectric power in the country. But there are concerns in the future about energy availability. We are seeing an increasing proportion of energy usage in mining operations in the DRC coming from diesel generators, which increases emissions. And so, governments definitely have a part to play in ensuring investment in national grids to make sure that power sources are cleaner. Other challenges as well to carbon emissions in Africa are also due to sort of freight and logistics. Certainly in Central Africa, a lot of material is removed from the country in trucks as opposed to through rail freights and that kind of thing, and that also contributes a large amount of emissions as well. So there are lots of challenges associated with it. I think when it comes to the role of African governments really is in creating an ecosystem which allows sort of these mining operations to grow in a way that sort of mitigates carbon emissions wherever possible. It's a real challenge. But I'd say my main issue with the question is I don't really understand the analogy. If anyone can jump in and sort of explain it, that would be much appreciated. Lithium ion and oil, I guess, yeah, I'd like to know what comparison's being made there.
Perfect. Well, I guess he was referring to the fact, or he or she was referring to the fact that electric vehicles are going to replace oil at some point in the transportation. But anyways, I'd like to move on to our next question for Bernard. As we know, Caudal Minerals is developing the Bougouni lithium project in Mali. Of course, we have seen the government transition, the recent coup in the country. I had the chance to speak to Clive Johnson of B2Gold a few weeks back, and he was mentioning that for their Fekola gold mining was business as usual. And he also mentioned that Mali is often overlooked because it actually has a very good framework for mining with tax stability agreements, etc. So, Bernard, I don't know if you could comment on how is this government transition affecting your project in any way at the time of permitting, and what do you think of Mali overall as a good jurisdiction to develop mines as successful as Fekola?
Well, yeah, I think there's a couple of very important points you're asking there, Alfonso. And number one, Mali is a very good destination for mining. It's a pro-mining jurisdiction. It has a well-established legal framework to operate within, and it has had very strong support from governments of all persuasions historically, and we expect, given the support of the population, that will be ongoing. It's been a major source of revenue, of investment, of jobs, and ongoing education within the country, and we see that continuing. And our relationships with the government, current and previous, have all been excellent. And again, that goes back to that well-established framework with a well-established and consistent bureaucracy that we're able to work with, and I think that's very positive. As you mentioned, it is what's referred to as a transitional government following the coup, a peaceful coup. Of course, it's removed a government that was elected. However, there were some irregularities, and I guess it's for the country to sort out its own political issues. But impact on us has really been very low. Our tenure is secure. Our ongoing relationships with the bureaucracy is strong. We're working with them now, as I mentioned in my introduction, to finalise our mining licence application. If anything, unfortunately, this year has had delays in our application, and we would have hoped to have this finalised much earlier this year, but clearly the impact of COVID-19 is worldwide. There was delays in bureaucracy, borders closed in Mali. The political unrest did not help us with moving to finalising the mining licence application. However, that's clear now, and the government is working, and we're looking forward to working with them.
Perfect, Bernard. Thank you. Thank you very much. I have a question for George from PwC, and is about how these developments in terms of new mining investment, new projects in battery metals, how can that basically promote local content in these countries in West Africa? I mean, we have seen with other industries, we are seeing it with gold, with oil in Nigeria, an important development of local content, and then those countries that are successful in developing their local content, they can export their expertise and train other countries and export their services. So, George, how do you see local content evolving in the mining industry in West Africa, going beyond gold to other commodities as well?
Okay, what's happened is that over the years, West Africa countries in particular have gained experience through the gold and oil that were discovered. Prior to that, local content wasn't a big issue. It wasn't paid attention to, and therefore it evolved into a big issue. Governments all across the West region quickly put in place local content policies, which required mining companies to make some milestone achievements when it comes to training locals to take over and also develop the expertise required. The problem we had within the region is enforcement. It wasn't very well adhered to, and we realized that most of the companies changed the goalposts. They say, look, we've done 6 years, but still we don't have any local who is good enough to be able to take up the roles that were required. This was in the 90s. That was the common language spoken by most of the mining and oil and gas companies. But subsequent to that, governments have been extremely aggressive in ensuring that local content rules are adhered to, otherwise their permits were not renewed. And therefore, we have seen a significant stride in local content development. Today, I see a lot of mines that before, way back in 2004 or 2005, had 60% expat rates, having 1 or 2 expats today, with all activities, including leadership taken over by locals, and it's cascade and percolate down and up in the value chain. With that experience, it is clear that with this new development into battery metals, the government of the region in putting policies together will ensure, or in bringing in investors, will ensure that these local contents are strictly adhered to and enforced. Resources or minerals within the region, or most parts of the region, belongs to the nation. And therefore, the nation has a hand, or the government has a hand, in striking contracts with any private investor that comes through. And within that, or in the process of agreeing on those terms, the governments are now able to ensure that local content policies are clearly spelled out, milestones to be achieved are clearly aligned or spelled out, and they are followed through to make sure. So this is a big opportunity for West Africa and the countries within to make sure that we develop the skills through the investments, the direct foreign investments that will be coming through, and then begin to export our talents to elsewhere in the world. Thank you.
Thank you very much, George. And George, from CRU, you as the editor of the CRU's Lithium Market Outlook Service, how do you think Africa will grow its slice of the pie in the battery metals market? Some estimates point at a jump from 9% today to 23% in a matter of 3 or 4 years. could you provide us some estimates, some figures of the importance of Africa moving forward in this value chain? I think you mute.
Sorry, I was just saying, as I saw that question came in, I was just quickly calculating what we have in our current forecasts. So I can tell you that for certainly for cobalt, obviously we expect Africa to remain the dominant source of cobalt worldwide. More so than in any part of history, actually. You know, we've got data of supply of cobalt going back about 60, 70 years now. And although the DRC has always had a very high fraction, it's never been higher than it has today. And I think right now we're expecting by 2025, you know, Africa will comfortably control around sort of 79, 80% of the world's cobalt supply. For lithium, it's really unclear at this stage. I mean, obviously, you know, for lithium, Africa has one major operating lithium project, which is the Bikita mine in Zimbabwe, which produces a petalite material, which then I believe a lot of it goes into the industrial sector for lithium mainly. But we have a wide variety of projects that we're tracking in Africa, you know, in Mali, obviously, but also the DRC, Namibia, and also a few in Zimbabwe as well. And yeah, there's a lot of potential sources of material. But right now, we don't have anything sort of 100% committed in our forecast as of yet. You know, we have a sort of standard gateway system, which all of our mining projects that we're tracking need to go through in terms of feasibility studies and construction and funding and all that kind of thing. So I would say that you know, there are projects and opportunities for lithium in Africa. As of yet, they're not quite sort of at the point where we have them sort of confirmed in terms of supply, but we are certainly keeping a close eye on them, and we have them sort of contributing supply towards the sort of mid-2020s, certainly within our forecast. But there's certainly a lot of investment potential. In terms of investment requirement, I don't know off the top of my head, I couldn't calculate off the top of my head how much requirement there is for these different elements, but it would certainly, you know, rank into the billions depending on how much of the how much of the mining sector we would expect to come online. So I'm afraid I'm sorry that I can't give a more definitive answer for lithium, certainly, because yeah, at the end of the day, right now it kind of feels like the lithium market's in a bit of a sort of foot race where, you know, you have a lot of very, very good lithium projects around the world, and you know, we're seeing sort of a race for sort of like funding and that kind of thing. And at this stage, you know, all we can do as analysts is keep an eye on all of them, keep track of all of them, and you know, do our best to sort of see which ones will sort of come to fruition over the forecast period. But certainly, we will need a huge amount of them. It's just a question of which ones are likely to come online.
Perfect. Thank you, George. Bernard, a question for you. You have extensive experience working under different companies in different countries in West Africa. After all these years, what do you say are the biggest challenges preventing further growth in West African mining? And what do you think are the best opportunities for West Africa as well?
Well, really, again, very interesting question, Alfonso, and I'm sure everyone would agree there's no simple answer to that. The challenges vary, and I think in all aspects of a mining project, number one, you have to demonstrate that you have a quality project and something that can support development. Generally, I would suggest West Africa, we're looking for something that shows a long life, a long mine life that gets government support. Keys to development of project, of course, as George mentioned, are financing. And I think we've probably seen numerous examples of projects that could have been developed, have missed out because of inability to finance, inability to demonstrate that they will provide a secure return, which again leads to the comments that we made earlier about why Mali is such a good jurisdiction, is that established framework and government support that allows companies to show that they will have a fiscal regime that's consistent and a policy that's consistent and supporting of mining. And that's quite key. And we're seeing that develop throughout West Africa. And One great example to look at would be the development of the mining industry in Burkina Faso from approximately 2007 through to current day, where from basically 0 gold mines to a multitude of gold mines today, from the establishment of a quality framework, from the companies willing to invest their exploration dollars, and for companies being able to attract support for significant capital development of mines, is a great light for us. And we can see that potential for us to be able to develop lithium projects in Mali and throughout West Africa. We can call on that backup to show that those projects can attract support and be developed.
Okay, thank you. And my last question for George Arjen is about the general impact that we have seen with the pandemic on the economies, well, worldwide, and in West Africa is no different. So how do you think the mining industry can be a driver for economic recovery for Ghana and the other countries in West Africa?
It's quite interesting to know that even though the COVID had impact on a lot of sectors, it had a mixed impact on mining. Some metals did very well, some suffered. Fortunately for the region, most of the metals that did well are within the region, especially gold. So it worked in our favor, especially West Africa, where gold did significantly well. I mean, oil is different, so we don't talk much about it. So yes, COVID had an impact on mining, but overall, the impact within the region wasn't as bad as it was in regions that are heavily dependent on oil and other types of commodity. As to how it could be a catalyst to drive the economy out of or into recovery is something that is pretty interesting. And I'll go back to our stability agreements within the various countries. To attract investment, mining, as we all know, is capital intensive, and the economic viability of the project is highly dependent on the terms that the governments keep to the mining companies when they are coming. So a lot of concessions were given to a number of mines to attract them into the region. Those mines are well established now, and most of those concessions are being taken, or whenever there are renewal, they are amended because they've gone beyond the concession period. So we've seen a lot of favor coming into the government side in terms of new agreements that are put together. That is not to say that governments are not stable. They agree with you on one thing, and then when you come in, they change it. No, we are mindful of that, and we know the effect that will have on the region. So governments are making sure that whatever stability arrangement they put into place, they allow it to run to the end before, when it comes to renewal, they put in a bit of tighter arrangement where they now begin to benefit the country a bit more. We have also seen a lot of push in the area of local content, where now mining companies and then the service providers of mining companies are required by law to have local partners to help develop local content and also develop other sectors of the economy. And so over the past 10 years in particular, I have personally seen a lot of improvement, and I think it's the right drive. The value chain is getting longer, and it's coming, the benefits are not going to the mining companies alone, but it's now coming down to a lot more people than it used to be. There is a bigger accountability of mining royalty from governments now. Before, the distribution of royalty to the various regions were not clearly being implemented. Now there is a push such that royalties coming from mining companies are being reinvested into sectors that will generate additional opportunities in terms of revenue, jobs, and other things for the country. So with all this in mind, I strongly believe that mining has a key role, and it will continue to play a key role in getting out of getting West African countries out of these difficult times that we have gone through. Thank you.
Okay, well, thank you all. It's time to wrap up. We've learned quite a few things today in terms of how Europe is becoming the most important market for electric vehicles, how the DRC is the most exciting cobalt jurisdiction and will remain the case for the coming years, and how there's other commodities in West Africa where there's big potential for development, like bauxite, for instance. So it's time to wrap up. I'd like to thank our panelists here, but before we all go, I'd like to ask them for a final statement. You have 1 minute to give your final conclusion, so we can start perhaps with George from the CRU.
Thanks, Alfonso. It's been really good to have a proper chat about the sort of potential for our operations within West Africa, certainly, and also like a wider discussion on the market. I think in general, I would say that we're expecting a strong increase in battery metals demand over the next 5-10 years. In the short to mid-term, for some metals, it is clear where that supply gap is going to be filled from, certainly when it comes to cobalt and to a lesser extent nickel, which we didn't get a chance to speak about today. But there are other elements like lithium, for example, where it really isn't clear at this stage which projects are going to be successful. We have a very, very large pipeline of projects all over the world with different challenges and opportunities facing them. Some are in West Africa, elsewhere. Some are elsewhere in Africa. And it will be interesting to see how these projects develop and sort of and keep track of how different operations can develop over the next sort of 5-10 years. And it's been a pleasure taking part. So thank you very much.
Well, thank you for being here, George. Now, Bernard, if you'd like to share with us a final statement, a conclusion.
Sure, and again, I just concur with George. Very happy to be part of this discussion and to hear the range of views, and I think it just confirms what I believe and what CODEL is looking to do, and that is develop in West Africa. We think we have a great opportunity. We think we're coming into a strongly improving market, and it just reiterates something that I've found ever since I've been working in Africa and West Africa in particular. And that is, I have great confidence that discoveries will be made, and then discoveries will lead to development and long-term benefit for the region. And I think that's going to continue as we move into the battery metal age, and lithium will be a fundamental part of that. So thanks for the discussion, and I look forward to more in the future.
Thank you very much, Bernard. And George from Ghana, any final words for us?
Yeah, my word is countries within the region have gone back to the drawing board and found the gaps they created when they had the opportunity, especially not paying so much attention to exploration, not paying so much attention to junior miners, which is the future of mining. With the advent of battery metal, countries are putting their act together to make sure that they support that sector so that it grows into a viable, massive mining companies that we see today. So overall, very excited to be part of this discussion. There is a future for Africa in the battery metal market. There is a bigger future for West Africa, given the resources that we have. And we are all looking forward to working together to bring these untapped resources to fruition and then take the benefits for the continent. Thank you very much.
Well, thank you very much. Thanks to Clarion Events for putting this session together, and thank you to the audience for attending this session. It's been a real pleasure, and stay tuned for more on this week's Africa's Mining Forum.
Thank you, Alfonso.
Well, thank you, Alfonso, for the great session. GBR have been our partner for years now and regularly bring in-depth analysis on strategic market and commodities. We truly hope that this session has enlightened you regarding the potential that West Africa holds beyond the safe metal that we all know. battery metals, and especially lithium, are on the investor radar, and you would have maybe have your eyes last month on Mali Lithium definitive feasibility study for the Goulamina Lithium project, who has the potential to become one of the world's largest quality lithium assets. Watch the space. This is the end of day one, and we hope that you enjoyed the content, insight, dynamism of our speakers, captain of this industry. I would like to remind you that if you wish to rewatch today's session, you can immediately have access to the recordings. That's us for today. Don't miss tomorrow's live discussion, as we will be diving into beneficiation and processing and tackle two crucial aspects of our industry, starting with ESG requirement and investor expectation, sponsored by TSE. And finally, we'll touch on the power and mining nexus, the never-ending story when it comes to delivering stable source of energy to ensure sustainable operations. Don't forget that our matchmaking platform is still open, so dive now into the attendee list and connect with new partners today. See you all tomorrow, and thank you for taking part.